Good morning. I'm Catherine Ross with TheStreet here at the NYSE with Jim Cramer.
Hi, Catherine.
How are you?
Well, look, Catherine, I think market's in a funk, and anything that comes out is interpreted negatively. Halliburton talked about a bit of a pause. Boom, that group gets killed. Schlumberger had a pretty good quarter. Doesn't matter, it transcends Schlumberger. A downgrade to sell of Union Pacific by Morgan Stanley resonates throughout the whole system, takes that stock down. Kimberly, initially up on what looks to be a good quarter, but the raw costs are so great that you can't own it. It takes back some of Procter & Gamble's gain. Honeywell, some critical comments that I think were completely unwarranted. It doesn't matter. Everything sticks that's negative. Nothing sticks that's positive. So where we are is in let it come downville. I wrote a piece this morning for Real Money talking about how it just was not. It was a very disruptive time for the bulls last week, and it's way too soon to expect that they can turn it. It is not a time where you should take your cue from China. The Chinese stock market is being propped up by the Chinese government, by the PRC. So let's let it come in a little here. Now, if you don't, we did a conference call last week for Action Alerts where we said, listen, certain stocks come in, and those really aren't coming in that much, but that's where you want to buy, and you should trial it to get the list. But it is just a uncertain time in the market. A lot of it has to do with China.
You wrote a Real Money column this morning talking about why you feel dispirited. Can you go into a little bit more detail?
Yeah, I feel dispirited in part because as much as I like Jay Powell, I think he's a very thoughtful man, the fact that they're not willing to recognize that the hazards of mortgage rates at 5% and what that means for the economy, that they don't look at the charts. Take a look at Paycheck's chart. I had Paychecks on, and they didn't talk about any sort of boom. If you take a look at a lot of the home builders and anything that goes into a home, people are affected by a 5% mortgage, but also credit lines. HELOC, a home equity line, has cost more. So I look at the housing market and I say that's the real economy. I look at the auto market, that's a real economy. And then I look at Micron. And Micron is really breaking down here. And Micron is the most basic building block for all semis. It is the one that, and there was a piece last week about sell the analogs. I guess where I'm going is that with the analysts getting this negative, now you're going into the biggest week of earnings, you're going to have some shoot the lights out earnings to turn people's heads. But Kimberly wasn't, Hasbro wasn't, and I've got to tell you, I am aghast that Halliburton could do this badly with oil. Remember, one of our principal worries was how much oil's come up. Well, usually the oil drillers, you want to buy them right now. So got to watch that group very closely.
If I were an investor looking at this market, what earnings company should I be worried about the most, do you think?
Union Pacific. It's a really great company. It's at the heart of so much of commerce. CSX reported an amazing quarter, and it is down big since it reported. And that's because people feel that it's the end of the cycle, and that the Fed has contributed to the end of the cycle, but there's also this theme of, is it as good as it gets? And if it's as good as it gets, then we have to sell. And so this theme is pervasive. Now, understand, I am not saying it's right to sell. As a matter of fact, I defended some people who want to sell PayPal here in Procter & Gamble make a big mistake. I'm saying that the tenor of the analysts is it's too late in the cycle, and we've got to take some profits, and the money's being distributed into, say, the Cloroxes. I find that to be dicey. I understand why people take things off, but it's worrisome because if you do really great and your stock goes down, CSX, what happens if you're not great? And that's what I'm worried about.
On Mad Dash this morning, you talked about Apple, and I'm wondering if you can talk a little bit more about why you chose Apple.
Toni Sacconaghi is a very good cover of Apple, and he hasn't had a lot that I think is really positive to say. And he comes up with an advertising model for Apple that could be the son of Amazon. Amazon is a very good advertising market. Now, you have to thread the needle there because Apple's much more committed to privacy than anybody else. So you don't know what they're going to be willing to give. What are they going to send to you? But they've developed a number of products. For instance, Apple Finance is much, much better. I wonder whether that's why Yahoo Finance has really tried to bulk up. because Apple Finance is going to be what you get, and Yahoo Finance, I think, is going to lose a lot of page views. Yahoo Finance has been very aggressive in taking talent, including Street, and it's very interesting. It comes at a time when I think Apple's products are getting more and more sophisticated. They're really turning, and Toni Sacconaghi mentions these verticals. Apple News is an ability for them to advertise. So I thought the piece was really, really great. Again, it's going to fall on deaf ears. We are not in a moment, we're not oversold enough, although we're very oversold, to make it so that people are going to get in. Now, I have to tell you, seasonally, thank you to Larry Williams, seasonally this week begins a very good time. The mutual funds are locking in, their fiscal year ends in October. These are traditionally very hard days, and they're proving out to be hard days. But I urge people who are longer term that you're going to get a good time to buy more, and I will certainly put more money to work for my kids at the end of this week if this continues.
I want to talk to you more.
I can only own index funds. That's all.
Good to know. I want to talk to you more about Facebook and Apple and also the markets in general, but I'm going to save that for our Action Alerts Plus
Absolutely.
video.
Very good.
So thank you for joining me.
Thank you, Catherine.
Have a great morning. I'm Catherine Ross with TheStreet. See you guys tomorrow.